Hello students, this is grade 12 economics lesson provided by the Ministry of Education Ethiopia, and this is unit 5 and the topic is tax theory and practice, and this is the third lesson which is about the approach to tax equity. At the end of this lesson, you will be able to distinguish the benefit approach and the ability to pay approach to tax equity, define progressive and regressive tax, differentiate tax evasion and tax avoidance, explain prevailing problems of taxation. Students, let's revise the previous lesson first, which was about the types of tax. Taxation is broadly characterized by the compulsory nature whereby it imposes obligations on taxpayers. Tax is broadly classified into two called direct taxes and indirect taxes. Direct taxes impose the burden or impact and incidence on the same person who earns the income. Simply, direct taxes are taxes that are imposed on individuals' income directly or business entities' income directly. And examples for the direct taxes are personal income tax, rental income tax, business profit income tax, capital gain tax, and the likes. And an indirect tax is a tax which is imposed on consumers by adding on the price of goods and services, and most of the indirect taxes are sales taxes. And the most widely used indirect taxes are value added tax, excise tax, turnover tax, and withholding taxes. Students, the day's lesson is about the approach to tax equity, and there are two approaches to tax equity called the benefits approach and the ability to pay approach. The benefit approach states that, according to the benefit approach, an equitable tax system is one in which a taxpayer contributes in line with the benefits which he or she receives from public services. That means individuals will pay tax based on the benefits that gained from the government or public goods and services. According to the benefit approach, those individuals who use more public goods and services are expected to pay more taxes, and those individuals who use less public goods and services are expected to pay less taxes. For example, according to the benefit approach, an individual who mostly uses a highway is expected to pay more tax, and those individuals who uses less in this highway are expected to pay less taxes. Tax obligations should be based on the benefits received from the enjoyment of public services, according to the benefit approach. The advantages of the benefit approach are: it links the discussion of tax equity with the expenditure side of the public budget. It links the discussion of tax equity with the expenditure, means public expenditure or government expenditures for the construction of highways, for railways, dams, and the likes. When we see the disadvantage of the benefit approach, it is much easier to state an abstract basis. An abstract basis, that means it's difficult to monetize the value of public goods and service, or simply it is difficult to explain the benefits of public goods and services in terms of money. Hence, it is more abstract. This is the disadvantage of the benefit approach. The second approach of tax equity is the ability to pay approach, and the aim of this approach is to impose the tax within the people's ability. According to this approach, those people who can pay more taxes will pay more taxes, and those people who cannot pay more taxes will pay less taxes, according to their ability to pay. According to this approach, tax is levied on each taxpayer in line with his or her ability to pay. Taxes should be distributed as per the capacity of the taxpayers to pay them. People with equal capacity to pay the same, and for people with greater ability to pay more according to the ability to pay approach. This approach is based on horizontal equity and vertical equity. The horizontal equity states that it's a situation where people in the same circumstance pay the same taxes. For example, if an individual whose monthly income is 5,000 is expected to pay 5% of personal income tax, at the same time, another individual whose monthly income is 5,000 is expected to pay 5% of his income, according to the horizontal equity. The vertical equity states that unequal should be treated unequally. Those who get higher income might pay lower tax or higher tax, and lower income might pay lower tax or higher taxes. According to the vertical equity, we can categorize taxes, personal income taxes, into three called progressive tax, regressive tax, and proportional tax. The progressive tax is one where those with higher incomes pay a higher share of taxes out of their income compared to those with lower incomes. According to the progressive tax, it imposes higher taxes from those individuals who earn higher income, and it imposes lower taxes from those individuals who earn lower income. So, the progressive tax structure often hurts those individuals with high income brackets. And the Ethiopian personal income tax structure is progressive, which imposes higher taxes from those individuals who earn higher income and lower taxes from those individuals who earn lower income. The second personal income tax structure is the proportional tax. It is one where everyone pays the same share of taxes regardless of income level. The proportional personal income tax structure imposes the fixed percentage of taxes on individuals regardless of the changes in income of consumers. For example, according to the proportional tax, the Ethiopian government can impose 20% of tax from my personal income and from Sheikh Mohammed Alamuddin's income. And this kind of tax is proportional tax. The third personal income tax structure is regressive tax, which is the opposite of progressive tax. And the regressive personal income tax structure is one where those with high income pay a lower share of income in tax than those with lower incomes. In short, the regressive tax structure imposes higher level of income tax from those individuals who earn lower income, and it imposes lower level of tax from those individuals who imposes higher tax. And the regressive personal income tax structure is mostly designed to curtail the aggregate demand, because in every economy, the majority of the people are expected to earn lower income. Hence, by increasing the tax that's imposed on these individuals, then government can curtail aggregate demand or reduce aggregate demand, and by doing so, it can control demand pull inflation. The regressive personal income tax structure hurts more those people in low income brackets. Low income earners are more highly affected with the regressive personal income tax structure. In practice, it is not a usual way of imposing tax. The regressive tax is not applied in most of the developed countries. Let's rise to the other lessons of the day, which is about the problems associated with taxation. The major criticisms of tax systems around the world have focused on the complexity of their administration. Most of taxes are more complicated to administer, and the other problem is the difficulty of the taxpayers to understand or comply. Tax compliance is the degree to which the taxpayers are with the tax laws. And there's difficulty to understand the tax laws, what the economists refer the tax non-compliance, and this is the other problem associated with taxation. Both problems of complexity of the administration of taxes and the difficulty of taxpayers to understand and comply cause taxpayers to incur costs to correctly calculate their tax liability. This may encourage the growth of unreported transactions in the underground economy. The underground economy is economic activity in which individuals or businesses will not pay tax or they do not pay taxes. For example, local Taj production, Araki production, Talla production, these economic activities are mostly categorized under underground economy because they do not pay taxes for the government. In developed countries, one of the tools for improving efficiency in tax administration is to modernize customer services. This activity is based on the recognition of new management techniques with new concepts of client orientation or customer orientation. If there is good orientation for the customers about the tax system, then these difficulties or problems will get solution. In developing countries, including Ethiopia, tax systems face diverse problems. Some of these problems includes the complexity of the tax system. It's more complicated. The tax system is more complicated and it's difficult to administer and it's difficult to understand by the taxpayers. This is one of the major problems of tax systems in developing countries like Ethiopia. And the perception of corruption is the other problem of tax. And the most tax systems are vulnerable for corruption due to tax evasion and tax avoidance. So, corruption is a headache or the problem of most of developing countries' tax system. And the cost of compliance to taxes by the taxpayers is another problem of the tax system. And the fairness perception of the tax system and the tax knowledge that the taxpayers do have and the authority that the tax proposed is problem of the tax system in developing countries. Broadly, these problems can be categorized under tax compliance and bureaucracy in tax systems, and the problems that are related to tax compliance are the biggest problems which are faced by any tax administration. The term tax compliance refers to the degree to which the taxpayers with the tax laws. But the tax compliance is not the problem of tax. The problem is tax non-compliance. When the taxpayers are far apart with the tax laws, it is called the tax non-compliance. This is the major problem that is associated with the tax systems in developing countries like Ethiopia. Tax non-compliance takes the form of tax avoidance and tax evasion. Tax avoidance refers to arranging one's affairs so as to minimize the tax burden, and it entails taking full advantage of the provisions of the tax code or schedule to reduce one's tax obligation. For example, an individual with annual transaction which is greater than 500,000 is registered for the turnover tax. But the turnover tax allows those individuals whose annual transaction is below 500,000. In this case, there is tax avoidance. That means the tax authority arranges these affairs so as to minimize the tax burden of an individual in order to pay 2% or 10% of his annual transaction or profit. So, tax avoidance is arranging one's affairs so as to minimize the tax burden. Since it is minimizing the tax burden using the problems of the tax law, this tax avoidance is legal. The tax evasion is falsifying information on a tax return in order to reduce one's tax liability, or even not filling at all, not paying at all any type of tax is called tax evasion. For example, if an individual whose annual transaction is per 100,000 registered his annual transaction as only 10,000 in order to reduce the tax. This is falsifying the tax information. Hence, it is considered as tax evasion. From the legal side, the tax evasion is an illegal activity, but tax avoidance is relatively a legal activity. Tax evasion is rooted in underground economic activities. Falsifying information, tax information, is mostly rooted in underground economic activities. Underground economic activities are those economic activities who are not registered for tax by the revenue authority. And this is because A, certain activities are illegal. Illegal activities are such activities like drug dealing. So they don't want to register for the tax revenue because their economic activity is illegal. And the second reason is there is high marginal tax rates. So in order to use this marginal tax rate, the taxpayers do not want to pay the taxes or simply falsify their taxes. The other problems which tax administrations face both in Ethiopia and elsewhere are a steadily growing workload of tax by the employees of the tax authorities, the complexity of legislation, the legal system to address tax problems is the other problem of tax, the attitude of taxpayers and the degree of non-compliance, the degree of the taxpayers with the tax laws. This is the problem of tax. The need to reduce costs of tax assessment and collection, and the need for efficient and effective management. The management problem is another headache of the tax system. And finally, the need to improve the customer service. These are the major problems associated with taxation. Students, let me give you exercises. The first question is a situation where people in the same circumstances pay the same taxes is A, horizontal equity, B, the benefit equity, C, the vertical equity, D, the progressive equity. The second question is the degree to which the taxpayers with the tax laws is termed as A, tax compliance, B, tax avoidance, C, tax non-compliance, D, tax evasion. The third question is a tax by which the tax rate decreases as the taxable amount decreases is A, progressive tax, B, proportional tax, C, regressive tax, D, aggressive tax. The fourth question is dash is falsifying information on a tax return in order to reduce one's tax liability or even not filing at all, or failing to pay legally due taxes, which is illegal. A, tax avoidance, B, tax evasion, C, tax incidence, D, tax management. Students, welcome back. Let's do the questions together. The first question is a situation where people in the same circumstance pay the same tax is, the answer is horizontal equity. Those individuals who earn equal or similar income should be treated equally, or they are expected to pay equal taxes according to the horizontal equity. The benefits approach states that people should pay taxes based on the benefit that they get from public goods and services. And the vertical equity states that unequals should be treated unequally, and there is progressive, regressive, and proportional tax under the vertical equity. So the answer is A, horizontal equity. The second question is the degree to which the taxpayers with the tax laws is termed as tax compliance. It is a definition. And the third question is a tax by which the tax rate decreases as the taxable amount decreases is a progressive tax. Progressive tax is a tax that imposes higher taxes from those individuals who earn higher income and lower taxes from those individuals who earn lower taxes. And this progressive tax is the personal income tax structure of Ethiopia. The proportional personal income tax structure imposes a fixed amount of percentage on individuals' income regardless of changes in income of consumers. And the third one is regressive tax. Regressive tax is a tax that imposes higher level of taxes from those individuals who earn lower income and lower level of taxes from those individuals who earn higher income. So the answer is A, progressive tax. The fourth one is dash is falsifying information on a tax return in order to reduce one's tax liability or even not filing at all, failing to pay legally due taxes, which is illegal. This is the definition of tax evasion. So the answer is B. Students, let's summarize the day's lesson. The aim of the ability to pay approach is to impose the tax within the people's ability. That means those individuals who can pay more taxes should pay more tax, and those individuals who cannot pay more taxes should pay less tax. And tax avoidance refers to arranging one's affairs so as to minimize the tax burden. And from the legal point of view, the tax avoidance is a legal economic tax problem. And tax evasion is falsifying information on a tax return in order to reduce one's tax liability. From the legal point of view, tax evasion is an illegal act. Students, this is all about the day's lesson. Thank you.